Welcome back. We are celebrating Republic Day here in the studio ahead of the Republic Day weekend. So hope you have a great weekend as well. But lots of stocks in focus. Let's get straight to it. HDFC Bank tops the charts. It's been at a fresh 52-week low and there's been lots of selling there. But Abhishek is here to give us the latest on that. Abhishek, over to you.
Well, Sonia, HDFC Bank sources tell CNBC TV 18 that they believe that they can create HDFC Bank every 4 years, which is a balance sheet size of about 30-35 lakh crore. Tight liquidity was a sudden development which has created a near-term bump for them. They will prioritize margin over growth, that is the net interest margin over growth, and that can protect your return ratios as well. They have approached SEBI at the behest of foreign funds, and the beneficial owner rule is not applying to companies with no identifiable promoter, and that must be communicated in writing as well is what they have said. Back to you.
All right, thanks a lot for that. Well, the stocks that I'm watching, there are, of course, a lot of stocks in the two-wheeler space. So let's start off with Bajaj Auto. Very good set of numbers coming in for Bajaj Auto this time around, well above what the street was estimating. The revenues went up by 30%, led largely by the domestic growth that we've seen. There's been a margin improvement of 100 basis points year on year. And the company in their press release mentions that better realizations, cost management and operating leverage is what aided the margins this time around. So good numbers coming in. In the conference call, the management also said that they expect a domestic industry growth of 8 to 10% in FY25. The export markets are also holding quite steady, and they're steadily scaling up the Chetak EV volumes. They have a market share of 14% now in that space. And the Triumph has reached a retail market share of 20% in states like Bengaluru. So good numbers coming in, and I'm going with green on that stock. In fact, we have the management on their earnings in just a short while from now. But Tata Steel is what you're looking at.
Well, Tata Steel looked good. If you pull up the intraday chart yesterday, the street sense that these numbers are going to be good, and they are quite very, very good, by the look of it. You also had the China news that came in. That's why it could explain why the stock ended at the high point of the day. Let's get to the numbers. The consolidated EBITDA is the number that we look at. That was much better than what we were working with. The reason is the India business did splendidly well while Europe continues to struggle. So for the India business, we were working with a number of around 14,500 rupees per ton. Well, it came in at more than 16,900 rupees per ton. So that looked good. Why was that? Volumes were a little bit better, realizations were better, and lower raw material cost. We'll need to understand this lower raw material cost in greater detail. I'll be speaking to the management later today. So hopefully we try to get you something on that front. Europe. We were working with a net loss of close to around $180 per ton on an EBITDA loss. Well, it was as bad out there. Both Netherlands as well as the UK continue to deliver negative EBITDA per ton numbers. The net debt number remained more or less stable because they have expansion underway and they also have capex plans. And they're also saying that they're moving towards commissioning that 5 million ton plant at Kalinganagar. The important part to track will be India was good. How much of it is sustainable? When will Netherlands turn around? And what's the outlook on net debt? We'll try to get those answers in a few hours from now itself.
All right, Nigel, thanks very much for that. So that's steel in focus. Well, Tech Mahindra reported numbers. The numbers came right around close yesterday, and the numbers seem quite okay. Rima, morning.
Yes, there is a revenue beat. The street was expecting revenues to decline for Tech Mahindra by nearly 1% quarter on quarter. They've reported a revenue expansion of 1%. Margins and profits are in line with street expectation, but the street is quite divided. What works for Tech Mahindra is the fact that its valuations are on the lower side. But the question is, can the company turn around? Because it's still a very challenging period. There is a new management in place. So the street is divided. Morgan Stanley believes that Q3 may mark the bottoming out of the performance, but they are still underweight on the stock. HSBC has a hold. They say while an experienced team is in play, they expect the turnaround to be challenging, especially in the current environment. Also bear in mind, while Q3 numbers are a beat on the top line, the stock already rallied 3% yesterday. Back to you.
Thanks a lot for that. Well, TVS Motor is the other one that we're looking at. Good set of numbers coming through from the company this time around. They were ahead of estimates. A revenue growth of 26% is what we've seen for TVS Motor. The volume growth is very strong, about 27% volume growth coming through. And the EBITDA has gone up 40% for TVS Motor this time. The important bit is that the company has hit record high margins of 11.2%. It would be important to see if they can scale up these margins further, given that, raw material costs are now starting to rise. The company has also surpassed its previous year's annual profit within 9 months itself. So good set of numbers, and the net profits have gone up almost 70% this time around. In the conference call, the management said that they sold 48,000 units of EVs in Q3 of FY24. The profitability of the EV business is improving now, and they're seeing growth particularly come in from the urban and the semi-urban areas. So I'm going with green for TVS Motor despite the rally that the stock is seeing.
Okay, all right. Let's go to Sonal. Sonal's here to tell us about DLF. Sonal?
Very strong set of earnings. Their operational update in terms of bookings was the highest quarterly number that they've seen at 9,047 crore rupees. It's an uptick of 261% on a YY basis. And if we see the trend as well, their quarterly trends have been around 2,000 to 2,500 crore rupees in terms of bookings. And it is a big uptick that we've seen in this quarter itself. The company says they saw 3 launches in Q3 and they will be maintaining their net cash position, which they have achieved after a lot of quarters. In terms of their outlook, it is quite positive as well. They will be tapping new geographies and expand there. They are looking at double-digit rental growth through organic and new development as well. And rental portfolio will grow by 2 to 3 times in the next 5 years. They are targeting double-digit PAT growth annually, and they will also improve shareholder return by increasing dividend payout. So strong set, but the stocks in the real estate space have run up a lot. So we'll see which way things go today.
All right, thanks a lot for that. I'm also watching out for a couple of stocks in the broader markets, especially these tire manufacturers. SIAT has come in with their numbers, decent set of numbers there. The revenue growth has been about 9%. The EBITDA has gone up about 76% this time. The margins have improved year on year, to about 14.1%, led by a raw material cost reduction and operational efficiencies. And the net profits have come in at 182 crores, well above what they saw same time last year. The important bit for SIAT is that the debt has also gone down. On a quarter-on-quarter basis, the debt is down by almost 9%. Coming in at 1,720 odd crores. Now, Balkrishna Industries, let's pull up that, numbers as well. Decent earnings coming through, revenue growth in low single digits, about 5%. EBITDA has improved, margins have gone up to almost 24%. The board has approved the merger of BKT Tires with the company. If you look at the sales volumes, in this quarter they've recovered. The sales volumes are up about 9%, but 9 months FY24 sales volumes are still down about 8%. And this has been a very volatile stock because of some pressures that we've seen in the export market. So, yes, I'm going with green, but still there is, some amount of volatility in the numbers. In fact, we have the management of SIAT that will be joining in on earnings in a short while from now. So, do stay tuned in for that.
All right, so that's coming up. Well, Birlasoft is another management we will be speaking to in a bit from now. But numbers first. Rima is here with that. Rima.
Well, it's a good set of numbers from Birlasoft. In a tough quarter, the company's clocked in a revenue growth of 1.9% in dollar terms. Despite a 2-month impact of wage hikes, the company's margins have expanded to 16%, driving an 11% jump in the company's profitability. But while the numbers are good, remember the stock has been a rank outperformer, 180% rally in the last 1 year. Back to you.
All right, thanks a lot for that. Well, Abhishek is with us to talk about PNB Housing Finance. Abhishek, over to you.
Well, it's a weak set of numbers coming in from PNB Housing Finance. The net interest margin and spreads both are at 6-quarter low. Although they have a one-off impact, they are still on the lower side. Net interest margin has declined to 3.49% versus 4.68% on a YY basis and about 3.95% on a sequential basis. Spreads have also declined to 2.12% when compared to 3.83% YY and about 2.6% on a sequential basis. The disbursements are up almost 21% YY, but that's not translated into AUM growth. AUM growth continues to remain weak on a YY basis at less than 5%. Gross NPA, that's one of the best that you are seeing in last 17 quarters, coming in at 1.73%. However, in terms of the performance, both the NI and PAT is below Kotak Securities estimate. Back to you.
All right, here's a quick recap of our top stocks. Stocks with positive news flow: HDFC Bank, Bajaj Auto, Tata Steel, Tech Mahindra, TVS Motor, DLF, Balkrishna Industries, SIAT and Birlasoft, while PNB Housing is the only stock on our radar that's likely to open in the red.